All right, we're still doing calculations on the cost of owning and operating a vehicle. In the first part of the lesson, I had you go online and use a calculator to determine what the difference is between purchasing a vehicle cash versus financing. And the ultimate difference comes down to the cost that financing adds to the cost of the vehicle. Separately, or subsequent to that, I had you use the Edmunds True Cost to Own calculator to determine what the actual maintaining and operating costs are for that specific model based on your zip code. It's a really, really intuitive tool, and I really like using it. But let's look at a specific example. So if we have, in this example, we have a car, it's a 2020 Ford Explorer. The total cash price for the car, fair market value, is $51,720. That's the cash price. If you were to walk in with a stack of cash, or you're ready to write a check because the money's in your bank account, this is what the car would cost. And if you put that money down, you walk away, end of story. You don't pay anything else to purchase the vehicle. That would include sales tax and all that good stuff. Now, if you get financing, then we're going to see a different picture. And the reason is because of the interest that needs to be paid back on the loan. And the interest is impacted by your credit score. So these are the important components that I want to make sure that you understand when you buy something cash versus when you finance it. The difference of what the interest is going to do, not only the interest, but the length of the loan. If you get a 36-month loan versus a 48-month loan, or a 60-month loan, and you definitely don't want to get anything longer than that. And then ultimately the impact that your credit score has on the interest rate that it becomes available to you when you try to get financing. So with the second part of the lesson, which was using the True Cost to Own calculator at Edmunds.com, we learned a lot of really cool information. So number one, the cash price or the market value, you can find that on Google or anywhere online, but based on your zip code, you can see what the cash purchase price of the vehicle is. And then what TCO does really well is that it calculates the true cost to own. This is going to include depreciation. Let's look at how much this vehicle depreciates over having ownership of the vehicle for 5 years. So if you look at the cash price, which is $51,000, after owning the car 5 years, the value depreciates by $25,000. So basically 50% of its value is lost in depreciation. And your true cost to own, which is going to include maintenance, insurance, it's going to include the financing interest estimated at 10%, and the other costs that get factored in, fuel, all the other costs based on your zip code and the vehicle itself. So the true cost to own is really interesting because I want you to be aware and I want you to understand most people, when they consider purchasing a vehicle, they look at this, which is the cash price. And they make their financing decisions, they make their buying decisions based on this, and they think that this is the end all and this is where it ends. And it's not, because clearly we can see that it will cost more to own and operate the vehicle than the purchase price of the car itself. So this is important to know and understand. The calculator is great because you can compare two vehicles to see where they may be $1,000 difference in price, two sedans, let's say, or two pickups. You're comparing the two vehicles and they may be very similar in price, but the cost to own the vehicle, factoring in depreciation, maintenance, fuel, insurance, all of these things could make one car dramatically more expensive or another one less expensive than the other to own and operate. So this is really valuable because we're able to see if we were to add the purchase price, the cash price of the vehicle, plus the true cost to own, we're north of $107,000 over 5 years. And what we're looking at, the depreciated value, 51,000 minus 25,000, roughly 26,000. So if you wanted to sell the vehicle after 5 years, this is what you're looking at getting in return for the money that you put in. I want you to understand The depreciation doesn't come out of your bank account. You don't write a check. You don't send it to the state or the government. No one comes to collect the depreciation, so it's not like you're paying into it. But when you try to sell this asset, when you try to sell this vehicle, this is money you are not getting back. You put in 51,000, your operating costs were 56. That factors in this depreciation that you will not get back. So going into, this is part 1 of the lesson. This is part 2. Let's look at part 3 of the lesson. Let me get my eraser. I'm going to give you a link to the investment calculator. And what I want you to do is I want you to take what you would put into this vehicle minus the depreciation. Okay, again, you're not writing that out. So we're going to subtract the depreciation from the true cost, and that's going to give us $31,192. So this ultimately is what I would consider your operating costs above the cash price of the car. So now I'm going to add the cash price, $51,720. That's going to give us 89,000. This is my example, 89,912. This is the number I want you to take, and I want you to divide by 60 months. So take this number, and how did we get here? We took our true cost to own, we subtracted the depreciation, which gives us what I consider your operating costs. We add your operating costs to the cash price, and that gives us 82,000, in this example, 912. We divide that by 60. I want you to take that monthly number, plug it into the investment calculator as your starting number and your monthly contribution for 5 years. And then I want you to take that 5-year number, what your investment grew, and compare it to the current value of your car now. And the current value is going to be your cash price, $51,720. We subtract the depreciation, $527, and that's going to give us $26,193. So your investment amount is going to be that monthly number as your starting number, your monthly contributing number, 7% rate of return over 5 years or over 60 months, and we're going to compare that number. I want you to compare that number to this fair market value. We'll call it FMV, fair market value, after 5 years. This compared to that, and see what the difference is. And then I want you to think about, if not buying a car is not an option, if you absolutely need to get a car, what you can do to be creative to reduce and limit the expenses you have, either through the cost of the car, the financing. What are the things you can do to minimize what your output is going to be, both on the cash price and the true cost to own, and also help you be in a position where you can put money into an investment? Email me with questions.